Hey, welcome to another episode of Making Billions. I'm your host, Ryan Miller, and today I have my dear friend, Ron Bauer. Ron is the founder and CEO of Theseus Capital. It's a family office out of the UK that focuses on investing in early stage companies. So what this means is Ron is an expert at starting, scaling, and exiting companies, resulting in billions of dollars of market cap created for his partners. So Ron, welcome to the show, man.
Yeah, thank you so much for having me. I've followed your show and I've been a big fan, and I've seen some of the great deals you do and some of the great people that have been on your show. And so it's a true honor, and I appreciate you having me on your podcast.
Oh, brother, thank you so much. You're very kind. And, it's certainly my honor to have someone of your caliber and the magical things that you've done. We're going to get into that. So you're going to want to tune in, hang in there till the end. Hopefully we can pull some of that deep wisdom that Ron brings to all his partners. Maybe he can share some of that wisdom with our fans around the world. So, with that said, Ron Bauer, in the early days, you weren't doing deals like you are now. I mean, you started out like a regular guy, like most of us, and you found your path. And I know a lot of our entrepreneurs, founders, funders, they all started early in the path. And so maybe you can share with us a little bit of that moment. Where did it start? What was that moment where it switched for you to get into this industry?
I was always interested in the markets, and from the age of, I'd say, 16, I started playing the markets. My high school I grew up in Canada, so I grew up in Toronto, and, being all around the world, live in London now, but grew up in Toronto. And when I was in my second last year of high school, there was a stock market competition, it was put on by TD Bank and the Globe and Mail, very large, top shelf newspaper, like saying like New York Times or the Times in London. And TD Bank, obviously everyone knows, one of Canada's biggest banks. And they put on this stock market competition. They gave us a $50,000 fictitious portfolio to trade with. I started trading. This is before the day. We're talking like 91 now. We're talking before the internet. Okay, there were no cell phones. Cell phones were it looked like a home phone in someone's car with an antenna. You remember those days?
Yeah, I remember.
And, people had pagers. And there was no internet or email, so you had to call your broker up on the phone. There was, reach him. And so it was the old days. And so we started with this 50,000 fictitious portfolio. I thought I was, Gordon Gekko here. I grew my portfolio from 50,000 to 80,000 in a couple of weeks. Thinking I'm, this amazing trader. I've made 60%, which is huge in a couple of weeks. And some of these guys have knocked it out of the park. They were at 300, 400,000. I'm scratching my head saying, how do these guys get so much? And I call the broker up, and the broker says, well, if you don't have time, you have 16 weeks. So if you like a stock and you think this is the stock you like, don't buy it and sit on it. This isn't like a buy and hold strategy for 10 years or for retirement. Buy options, either buy the call options if you think it's going up, buy the put options if you think it's going down. You can write options. You can buy futures, you can do sophisticated things. And, he was just talking over my head, and I'm thinking, how the hell am I going to understand all of this? And so, of course, what do I know? You had a library. That's how you had libraries. You didn't have Amazon. And so you had to go to the library or go to the bookstore. So I go to the library, try to find whatever books I can, go to the bookstore, buy some books on, futures and options, etc. And I start taking, gambles here on penny stocks and on, mining stocks and growth stocks. I found, Northern Miner, which is a magazine on, growth stocks in Canada. And all of a sudden, in 16 weeks, I grew the portfolio from 50,000 to 800,000. And that was it. I found my life calling. I got hooked, and I knew that this is what I wanted to do with the rest of my life. I was going to play the markets, trade the markets, do deals, and I was hooked.
Wow. So it got into you. You got the bug at an early age. I find that so important for all of us to teach the youth and everybody at early ages to really inspire them to build a career in finance, or at least understand it. So that's phenomenal. And
I think school, public school education in Toronto, of all places, it was. I went to state school for high school, and it was basically they had offered this to us as one of our, what used to be, remember, Ontario academic credits, what they call, A levels in the UK. So they pushed on us. I wouldn't be where I am today if it wasn't for that.
That's phenomenal. And I think you grew up from 50 to, I think, the peak of 800,000 in 16 weeks or something like that.
exploded, grew it
Yeah.
like, you know,
Good for you, man. That's awesome. And so after that, you did your thing. You grew up a little bit, and then I think you moved overseas from Canada. You became a world traveler, but it also added to you. So maybe walk us through a little bit of where you went from there.
Sure. Sure. My last year of high school, you know, all of a sudden had a massive change. My father was offered a big job in Israel. You know, I'm Jewish, born, you know, grew up in Toronto, was not religious or anything, just traditional. Mm-hmm. And my father got offered a job to go on sabbatical to Israel. And, you know, I went for a month holiday and I just fell in love with the place. I ended up staying 8 years. My parents left. I stayed there 8 years, had the best 8 years of my life, you know, everything from military, undergraduate, you know, university studies. I worked in the Israeli parliament for a member of parliament who then became a minister, became the home secretary, and, you know, made some great connections there, also in the financial sector. And, you know, from the connections I made there, I found my way into London and worked in the city and worked in finance, and, you know, found my first foray was not into trading. I was always trading a little bit as a day trader here and there, but I found my way into, you know, sales in a sales role, and was working in, you know, high sales for hedge fund instruments to high net worth investors. And, you know, from there did really well. I moved around. I was traveling in Switzerland and Italy, and through my connections there, I met a lawyer that was involved in doing IPOs and reverse mergers in the security space. And he introduced me to a bunch of VCs out of Canada. And, you know, one thing led to another, and here I am where I am today, 20 years later. You know, I always knew I wanted to do deals, and I had the opportunity to work with big deal guys that were putting deals together left, right, and center. And, you know, I got in my 20s and, you know, went out on my own almost 20 years ago to this day. I went out on my own and started doing my own deals. And so I started out with in Vancouver, of all places, with a VC firm, and also had a base in Europe as well. I was always back and forth, and, you know, just started doing lots of deals.
That's incredible. Yeah. So you and I definitely intersect in those early days. You're just hungry, man. You just wanted to do deals. Let's do some deals. Let's do it today, right? And anybody that asks my unqualified advice, you know, should I do a fund or a syndication or all these? Just do a deal. Like, obviously, make sure the legal structure is in place. You're fully compliant. Obviously, that shouldn't be said, but we'll say it anyways. But yeah, like whether you do it in a fund or syndication or anything, just if you have that appetite to start doing deals, man, you're going to make it. Like, just keep finding ways, finding deals. Right. Yeah. Just close deals.
Just do it. Just stop talking and do it. Just
get it done. Yeah. So day one is better than one day, right? So just start. So, you know, after that, so you started out, you won, you know, you were in this competition at a young age, and you moved to Israel, and you were a little bit in the military, the parliament, then you went back to Canada, you started in the hedge fund industry and sales, then you went into VC. And my understanding is you're a bit of an oil tycoon for a bit. Walk me through that.
So, you know, when I started, so when I left, when I moved from London, first I moved to the States for a year or two. I was working, you know, with these VC guys. Basically, you know, they had a simple business model. They had if they had an exit in a deal, they would take, you know, half their money and throw it into new deals. And, you know, they put me in a capacity in a number of deals of theirs. And so I traveled. I was in Florida, I was in Texas, I was in Louisiana, I was in California. I was traveling around working on these guys' projects and, you know, gaining experience. And I started, a lot of the deals were tech related deals. And when I moved to Vancouver to start doing my own deals, my first deal was a tech deal. And then the tech market crashed. And, you know, here I was, no one had money. It was a shitty time. I was, you know, sitting on a bunch of cash and, you know, in a difficult market. You know, my first deal did really well. And I'd gone from being, you know, this high level employee and, you know, on the board of these companies, making, you know, what I thought was great money, but was, you know, really not a lot of money compared to the money I made in my first deal. You know, I had a big exit through an IPO. And I was scratching my head thinking, what am I going to do now? And then, you know, out of nowhere, someone offered me this oil and gas opportunity in Texas. I remember it was in the Barnett Shale. And the deal came to us, and, you know, we had no way how to evaluate this. I didn't even understand how to look at this. You know, I'm not really an oil and gas guy. I'm a finance guy. And so we figured out, you know, let's go and hire someone to evaluate it for us. And so, you know, we were introduced through connections and friends of ours to Schlumberger. Schlumberger is one of, you know, the world's biggest oil services companies.
They're big.
You know, we had this typewritten, the guys we were doing the deal with gave us this typewritten geologist report. And like, we're talking about already in like early 2000, nobody used typewriters then. Everyone was using computers. It looked a little bit suspicious. So we had this, geo report, Ryan, and it looked great. It looked great. They told us, oh, you've got like 300-400 BCF of gas. We didn't even know how to calculate it. At the time, gas was like 10 an MCF. So they're telling us it's $3-4 billion of gas. And we're thinking, okay, even if it's 90% cost and 10% profit, that's still $300-400 million. It's a lot of money. Yeah. And gas was in short supply at the time. America was not, everyone was, all you would see was documentaries, you remember, saying how America's running on empty, peak oil. America's relying on Saudi Arabia, Middle East oil, and unfriendly nations. And, America's never going to be energy independent. Fast forward now 20 years, all of that was a lie. As we see, now America's shipping oil out to the rest of the world instead of importing it. But at the time, no one knew that. And so we figured we're scratching our heads saying, how do we evaluate this project? So we hired Schlumberger, paid them like 150 grand. And they came back with this, it was like a textbook, 400-page thick book with stamps and net present value calculations we didn't even understand. But they're saying the potential in this thing is like 800 BCF, double what these guys gave us. And we're like, oh my God, what a great business model. Here we can acquire a project for, a couple $1 million, pick up a property, take it public, drill some wells. You either find oil or you don't find oil. Sometimes it's better to not even drill the wells, do all the seismic, do all the work, and move it up the food chain to a mid-sized player that can drill more wells. And that was it. I was hooked on the oil and gas space. I said, what a waste. I was wasting my time trying to find, the next big, tech unicorn and grow these businesses. And there's so many variable parts against you, variable pieces. Whereas the oil business, you pick up a piece of land, you throw it in a company, you find some strong geos and some strong management people, and you drill and it's there or it's not there, and you get seismic done. And so that started our journey. We had a great run, 7-8 years. That's all we did were oil and gas. We did a bunch of mining deals just as a byproduct. People would say, oh, if you're interested in oil and gas, are you interested in a gold deal? Are you interested in lithium? Are you interested in cobalt? So they throw us mining projects along the way, and we got lucky. We had, we were introduced to this project in Africa, in Kenya, and we picked up an oil concession in Kenya and set up a small oil startup, my partner and I, and raised a bunch of money for it. And we had big plans, to take the company public in in 2008. And then we suddenly fell upon the financial crisis, unfortunately for us and for the rest of the world as well. Yeah. But we held on with our life to this project. I'm telling you, we were writing checks to keep this company alive, like 100 grand a month in the crisis, where that was 100 grand a month in the crisis was like 10 million a month in the crisis. No one had money and no one was giving you money. No investors would call us up and say, buy us out at a discount instead of saying, just give us our money back. They didn't even want their money back. They were happy to accept a big discount and a haircut. So we did the deal. We held on to it. We carried it. We ended up merging, Africa Oil came knocking on our door. It's a Lundin company. They came knocking on our door in the summer of 2009. And we decided to do a merger with them. And, people hated us. They were not happy that we did the merger. I couldn't go out in town. I would go out to places and people would say, oh, you screwed us over. What a terrible deal. The stock went down. We did the merger with them. Okay. Their stock went from $1 billion market cap to 220 in the crisis. Okay. And now we did the merger when they were 220. Right after the merger, they went down 50%, so they went from like 250 after acquiring us to like 120 or something, 125. Wow. I couldn't go out. I'd go with my wife, Ryan, and people would say to me, they'd come up to me and say, you screwed us, you ripped us off. Wow. And then a year and a half later, they hit, massive discovery on our concession in Kenya because of our company, because of our block. And the stock went up like 30 times. It went over 3 billion market cap. They've raised since then a couple billion. Well, we were still involved. They raised over $1 billion too. And it was a huge win. People would call me up and say, why didn't you tell me, why didn't you tell me? And I'm like, dude, you were calling me up, ready to send, people to knock on my door to give you your money back. Yeah, now stock's up 60 times from where you invested, and I'm your best friend all of a sudden. I have very good memory. I have very thick skin, and I have very good memory. You remember in times when times are tough, who your friends are. And, everybody wants to be your friend when you're making money and times are good, but you remember when times are tough and you're down and out. And I remember that very well.
Man, so the absolute cutthroat, man. That's how this industry goes, especially in oil and gas. You and I are pretty similar that way. I also had cut my teeth a little bit in the energy industry as well. And yeah, I could tell you, it is hardcore, man. That is cutthroat. And so here you are. I think it grew to like from after that merger and everything that you put together was about a $3 billion market cap. So you put a few $100 million into the pockets of shareholders at that point. And so now, right, you got to do the hard deals. Right. And that's what we're talking about. Like you hear, oh, it was all good and I just coasted through this deal and everybody was happy. Yeah. Who doesn't love that? But it's really the deals that you're talking about that people go through, that they do the hard deals. That people are like, shaming you in public and they just don't understand. Right.
It was a long journey. It was not a quick journey. And, Ryan, we were forced to buy back. Some people made us buy their stock back. They came to us, friends of ours were like, you got to give me my money back. This is terrible. So we bought people's stock back. And, when we made 30, 50 times on some on it, they all of a sudden, why didn't you tell me?
Yeah, right. And this industry, and for those of our fans around the world that are listening to Ron's story and, thinking, I know I get fan mail from a lot of investment bankers and these young guys that are listening to the show. We're just saying, listen to Ron, man, like you need a thick skin. You got to stomach the highs and the lows. And it's not just highs and lows in price, but when that price dips on a deal, as it happens often, some of your shareholders are going to have a lot more questions and they're a little emotionally charged. So running these deals, if you're going to make it long-term in this game, is listen to Ron and see exactly that experience that he's gone through. Right. And so sailing those rough seas makes a better sailor. Right. So here's Ron. He's doing these deals. He's closing it. And he knew darn well that the price is going to pop once they hit that oil on your block. And so now you did a merger. You get experience on doing IPOs and M&A and all of these things. How did that lead you into the this kind of startup venture capital world that you're in now? Like maybe walk us through. Let me improve my question. So maybe walk us through a little bit of some of those exits that you like to do. So now you're in these early stages, you take them to exit. Maybe walk us through how your exit from the oil company has now influenced how you exit your current startup companies.
Yeah. So, after that exit, I moved back to London. My wife wanted our kids to go to school in the UK and she wanted to move back home. My wife's British. So we came back to the UK and I decided I'm going to try and revisit that success. And so, like normally you have a huge exit, you make a lot of money. You think it's easy to make that kind of money again. And so I threw a few $1 million at, a bunch of oil and mining deals in Africa thinking, here I am. I'm the man. I just had this huge exit. I'm going to replicate the success. And I lost a few $1 million. And one of my big investors pulled me aside and said, you can't go back to the wishing well so soon after success. It's okay. Take a pause in life. Enjoy what you did, enjoy your success, and do something different. And, I always wanted to go back to school. So I went to Cambridge, decided to go to graduate school and do an MBA. So I signed up and did a Master of Business Administration at Cambridge. And while I was on my program there, decided I wanted to continue and potentially do a doctorate. And one of my professors, when I wasn't really interested in teaching and I saw it wasn't for me, one of my professors said, why don't you get involved in the university's ecosystem? We have this fund where we give grants to PhD students and academics that are setting up businesses. They give them like 150, 200,000 pound grants. And most of them are focused at Cambridge on science, medtech, biotech, things like that, the sciences. And so I was introduced to a medtech deal. It was a diagnostic deal and really interesting, 2 PhD students, one in neuroscience and one in computer sciences. And they came to me to match their grant. And, and I said to the guys, I said, Ryan, look, 150,000, you're going to get nowhere. You're going to run out of money in a month. So I put together a group of friends. We gave them $1 million and we helped take them public, raised them, a few $1 million in their IPO. They went public in Canada with Canaccord. And then since then, they've raised probably close to 20 million, maybe even more. It's been a huge success. The stock's up still today with the markets in turmoil, they're up 3 times on their IPO. All the investors had liquidity events. Everyone could have sold their stock and made money. The stock traded tremendously. But what that did is it opened up my mindset. And I said, I don't have to just be an oil and gas and mining guy. Really, this medtech deal that I helped put together and help finance, I was doing the exact same things that I did in the oil and gas and mining space. But here is a niche, for me. I could build a niche in the space of doing intellectual property deals, creating these university spin-out companies. And since then, I've really built a niche in doing these university spin-out companies. I've probably done 15 to 20 of these deals with universities like Cambridge, Oxford, Stanford, Hebrew University of Jerusalem, Cornell, Harvard, Columbia, Vanderbilt, you name it, loads of, top tier academic institutions around the world. And they all have a very common denominator. I work with founders who are either scientists or academics that have created groundbreaking intellectual property as part of, it might have been part of their PhD, might have been part of another graduate degree or postgraduate degree, or they worked on a team of researchers and they've created this IP, and I've helped them, license it out of the university and create a business that they control and they run. And we provide the sort of back end support and help them raise the capital and ultimately take the company to market, whether it's NASDAQ or New York or London or one of the Canadian exchanges. And I've built a really strong business in that space in the past 6-7 years.
Oh, wow. So, I certainly love medtech too. That's an area of interest as well. But so here you are, and this is exactly how it goes. So a lot of the guests that we interview is you start that skill and then you start to spread that skill. So taking companies public, you check that box, you understand commodity, like oil and gas, mining, all that stuff. Then you did an oil and gas deal, right? And you said, I'm a finance guy. So now you developed that skill set, and now you're able to take companies public. And so, would you say that that's one of your core focuses on Theseus Capital, is just to take early equity positions? Maybe walk us through a little bit of that focus.
I think now, what our real core model is working with disruptors. I'm looking for early stage founders that have great ideas, that are looking for a problem, and then they're looking for, a solution to that problem. And we look to get involved. We look to get involved as early as possible, so we can take an equity position. We can help hold their hand on their journey to success with our network. We've developed over 20 years. We've taken dozens of companies public. We've raised billions of dollars for our portfolio companies. Just in the last 3-4 years alone, 7 companies have gone public. They've raised over $300 million. We've created tremendous shareholder value. Stocks are up and stocks are down, no matter what. We don't run the companies. Our job is to help them raise early stage capital all the way through to an IPO and hold their hand. And my job is to help get them the money and get them public. I don't run the companies, and that's key. We will help bring people that can help them if they need a CFO or a COO or admin. But we like to get involved as early as possible. We also work with, mid-stage and late-stage companies. I helped a company last year in November go public that had been around for 28 years. They failed to go public a number of times for various reasons. Everything from wrong group, market conditions, wrong broker. And, we came in and we took our, we have a formula, a roadmap that I like to call, and we brought them in and we sort of helped them go through our roadmap to success, and it worked, and they ended up going public, and they've raised since then close to $50 million between their IPO, secondary, and warrant conversions, which they would have never done on their own. And we did that in 7 months, and that was a 28-year-old company. So not all the deals we do are early stage.
Wow. And it's phenomenal. So now it sounds like you've got a recipe. So what would be, and we'll get to that recipe in a minute, of some of the key things of going public. Maybe you could share with us
Sure.
with that. But before we get into that, I'm curious, what, for our listeners around the world, because we got funders and founders, right? So anybody listening to this, again, this is not a solicitation. It's just getting to know Ron a little bit better. So, whatever you're going to do, don't base any action on what we're talking about. But now that I've legally disclaimed everything, what is your investment focus at this? Is for people around the world that are hearing you? Not everybody's a good fit for every fund. Where do you guys like to dance?
So I'm actually shying away now. I think biotech is a little bit top heavy. There's biotech was really strong for a number of years.
Yeah.
And I rode that wave.
Yep.
And I think it's, I'm quite invested heavily in biotech, and I have a presence in that. But I've been looking very aggressively in the fintech space. I've been looking at fintech. I've been looking at EdTech. I'm a big believer in the metaverse and in VR. I know, Meta has taken a huge beating in the markets, and everyone's, laughing at Mark Zuckerberg and saying, oh, the stock's down, whatever it's down, I think it's down 70% or something like 60, 70% crazy from,
Zuck's getting spanked. Yeah, he's getting beat down.
But I mean, for anyone, if you've actually used an Oculus, a Quest 2, and you've gone in Horizon World and you've explored the metaverse and you've seen what's possible, you'll understand people laughed at Jeff Bezos as well.
That's right.
Don't forget, for 20, he was not, no one ever would have imagined he'd be $1 trillion+ market cap company. They laughed at him and they said, why are we going to go and buy books online? And look what the company does today. He was spot on. Same with Bill Gates. They laughed at Bill Gates. What did Microsoft started creating, an operating system? Now look, they control everything. Same with, loads of Elon Musk.
Elon Musk, yep.
Elon Musk created the first Tesla. I have one of those first Teslas, those cars that were built on a Lotus. People said, no one's get this Tesla is it's for not even the 1%. It's the 0.001%. How many of these cars can you make when you're relying on, Lotus to provide the body of your car? Now look at millions of Teslas. You look on the road now, there's Teslas everywhere.
They're everywhere.
The market cap is bigger than, a few of the major car companies combined. So I think I'm a big believer in the metaverse and VR. I think that's the future no matter what. And I think it's the future for events. It's the future for education. It's the future for communication. People do not want to, go back into the offices as much as people say, oh, we want to be together and we want to. People just don't want to. I don't want to go and I don't want to fly across the world and go and meet someone for a meeting. If I can do it on, on Zoom or in the metaverse and virtual reality and see them, why wouldn't I want to do that? And then go play with my kids or have dinner with my family instead of being stuck, making small talk in some restaurant. And so there are good things and bad things about it. So I think really fintech, edtech, metaverse, VR, I'm looking at Web3 as well. I'm a big believer in that. And I'm really looking for people that have disruptive ideas and need, support of, hands-on operators to help them out.
Awesome. I love that. And yeah, metaverse is really hot. So there's a couple of really big nuggets that I just want to highlight on everything you just said. So I believe it was Jeff Bezos. He said something along the lines like, I think he was commenting about Elon Musk from his own experiences, say, look, man, like really the only way to generate significant wealth is to go against conventional wisdom, right? If you're doing what everybody already understands, there's no more meat on that bone. You're not going to make any money. It's doing stuff where you got to be, and by the way, you also got to be right. So it's not enough just to be a rebel. You got to be one that's right in your position. Sure. So when everybody else is mocking, laughing, whether it's book sales or electric cars or software or gaming or meta, when everybody's like, it'll never take, well, until it does. And so, so pushing against that conventional wisdom, sticking to what you know is right is so critical. I've done it. You've done it. And now with your projects, are there any, like, I know you talked about metaverse. Are there any metaverse projects or anything that you're working on that you can share?
So I have a stealth project right now that I'm working on. We're in stealth mode. It's a metaverse focused edtech. And it's,
okay,
I
cool.
would say it's AR, VR, metaverse focused. Yeah. It's a mixture of digital textbooks and a metaverse environment for education. Yeah. But it's a real niche player in education. And, it's a group that has 11 years in their niche space. They've done, proof of concept with early adoption of virtual reality. And it's using virtual reality to teach. And the metaverse is really just, with the recent advancements in all these platforms, it just brings everything that they've been planning and they've been doing for a number of years to the forefront. And so, I got involved through through it's just, sometimes you're in the right place at the right time and the stars are aligned and you meet people, like I met you and I'm on the show.
Yeah, man.
So I was fortunate
Good to have you.
The same happens in Ryan, as yourself in business, and your circumstances happen without being planned. I was involved in a charitable venture and in giving a grant to this charity that does great things, and they asked me to help mentor people, and through that I met people involved in this business, and it just sort of is a really transformational business in virtual reality in the edtech space. And so I'm very excited about that, and there'll be more to follow, and we'll be out there launching it in the next, hopefully next 60 to 90 days.
All right. So follow Ron for stay tuned. I guess you're in stealth mode.
Exactly.
So follow you for all those cool things that are rolling out. It sounds absolutely phenomenal, but I'll respect the boundaries. You're in stealth mode, so I won't pry too hard, buddy. So, rounding third base here. Let's talk about a little bit of the, I think our fans around the world, I'm going to do my best to get your deep well of wisdom. So, what are some of those, now that you look back, you've had a massive amount of success, taking companies public, doing it in different sectors, standing it up, your VC, early stage, mining, all of these different things. I'm wondering if you could boil it down to about 4 or 5 things that you found that you wish you knew in the early days.
Wow, I mean, so many. I would say probably the first is, never give up. Failure is not an option, but it's okay to fail. Sometimes it's not going to work out, and sometimes you're going to have, roadblocks along the way, and you have to be ready for that. So I would say, never give up, keep going hard and working hard. Second, I'd probably say, create a business, not with the idea of making money, create a business out of passion, look for a problem, find the solution, and create that business because you have passion for that. Have charisma, enjoy what you're doing. If you enjoy what you're doing, the money will always follow. That's key. That's definitely key. Also, I would say, do your due diligence. Today it's really easy to go and find great people to give you advice and to consult you. And don't change your thought. If you have a great idea, if you found this problem and you think you can solve that problem and create a business around it, and people are going to, say to you, people are going to criticize what you're thinking, don't worry about, criticism. It's okay. But take, advice cautiously, figure out, do your due diligence, make sure that the idea you have is your idea. And it's okay to also take existing ideas and alter it. For example, you had Uber, you have Lyft, you have, Just Eat, you have Deliveroo and Postmates. You have loads of delivery companies. They're different areas. You have loads of other companies. So I think it's important to just, be focused. Probably my most important piece of advice, Ryan, is be focused on one thing. Too many people try to be, jack of all trade, master of nothing. And it's better to be, a master of one thing and not a jack of all trades. It's better to be really good and the best at one thing. Like, you look at some of the key people today in business, and they're really good. Like, Facebook started as a social media platform for, college kids. And that's why it was created. And they were really good at it. And then they exploded. Bezos started as a retailer for books. He wanted to be the best at books. If you listen to his early interviews, he said, there are millions of titles. There's no one that can bring it under this umbrella. They created this platform for books, but then all of a sudden realized the platform is good for everything else. Same with Apple, and they wanted to create these exciting products. They started with one computer and it transformed into everything: computers, iPods, iPhones, watches, iStore, everything. So, same with Microsoft. They started with Windows, an operating system for PCs. They weren't even their PCs; they were other people's computers. And so, I think be really focused on one thing. Do the best you can. Do it well. You can find people to fill the gaps.
Mm-hmm. Okay. And where do you like to, as far as your due diligence and your entry point? Now we're speaking to the investors on this side. Again, not financial advice, but just your opinion. Like, what do you see as a positive sign when you're doing your due diligence? And then maybe you can follow up with maybe some of those key entry points that you like to see.
Sure. So like I said, I've got two, if I'm doing my core, strength is early stage businesses, is startups, 0 to, call it 1 to 10 employees, or worst case under 20 employees, pre-revenue, maybe a little bit of revenue. Like I'm talking like proof of concept. They've just started selling. They're not profitable, but they've got a service or a product or an app or something, and they've started generating revenue because people are subscribing or buying into their story. So a little bit of, I'd say, 1 to 10, 1 to 20 pre-revenue or a little bit of revenue. Proof of concept is already happening. Some intellectual property or some, wider audience. And really, I'm looking for businesses that are unique and scalable, that can run with few employees and are portable. They can sort of, scale around the world. They have an idea that's not just a domesticated idea for one domestic market. Yeah. It's something that is a global need. If it works in the UK, it can work in America and Canada, Australia, Europe, wherever. I'm looking for something that has a global audience and global reach.
Phenomenal. So scalable and portable. Yes. And then your entry point is at most just under 20 employees, pre-revenue, maybe a POC, proof of concept in place with just a little bit of revenue, yes. nothing really to write home about. Okay, perfect. So, as we wrap things up, is there anything else that you'd like our fans around the world to know?
Yeah, I think that I'm open to deal flow. I would love, I'm a really easy guy to reach. If people say, oh, you're very difficult to reach, I can't get through to you, that's not true. You can go to my website, which is, going to be listed after the show, but I'll say it right now, www.thescapital.com. So that's THESCAPITAL.com. You can go on there. You can find, there's a link to book a discovery call with myself and my team. You can send us a message there as well. You can email us. The email's on there. It's contact, CONTACT, contact at thescapital.com. Send us an investor deck, send us an email, reach out. We're happy to schedule a call. You can find me on Instagram, which is, at Ron Bauer, RONBAUER 888. I'm also on Twitter and I'm on Facebook. I'm on LinkedIn. So I'm really easy to reach. Send me a message and, we'll get in touch, and we'd love to hear, about your deal and your project.
Perfect. Yeah, I absolutely love that. And, truly thank you so much for coming on this show. I know, to have a guy that's built market caps of $3 billion, that just to get your advice of how it started. I mean, you didn't start there, but you certainly scaled up to that point. So, in final remarks, just following Ron's advice, never give up. I mean, Airbnb, Uber, Amazon, Tesla, they were all mocked, right? They went against conventional wisdom. A lot of investors wouldn't take a position. And famous ones like I think Mark Cuban kind of laments passing on Uber. And there's a couple of things, right? Don't create businesses, solve problems, and then wrap that solution with a business, right? And finally, stay focused on one thing. Ron, you reminded me of a book that I deeply love. It's called The One Thing, and it's literally about that. And really, yeah, it's a great book. And so literally just nail it on one thing and use that success like Amazon did with books and Tesla did with its first release. Nail it on one thing, do one thing very, very well, and then use that success to scale out in other areas rather than just trying to go right to your end goal from the gate. It may not work out because you're too spread out. Nail it on one thing, on your go-to-market strategy, and then once you've nailed it, you can expand on there. You do these things, and you too will be well in your way in your pursuit of making billions.